Okay, let's forget the price charts for just a moment, because the real story of Bitcoin and Ethereum, it isn't about getting rich quick. No, it's about a fundamental battle for the future of the internet itself. We're talking about a clash of two very different, competing visions for a decentralized world. And today, we're going to dissect those visions piece by piece. All right, let's kick things off with just a single number, 135. For years, the prevailing narrative was that Bitcoin's development had pretty much ground to a halt. But in 2025, that whole idea was just shattered. We saw Bitcoin Core's active code contributors surge back up to 135. Now, that is a really powerful signal that the original crypto, well, it's anything but a relic. And that really is the key takeaway here. We're not talking about digital fossils. Both Bitcoin and Ethereum are living, breathing systems. They're constantly evolving, constantly competing. So our goal today is to get under the hood, to really understand their core blueprints, from the economic engines they run on, all the way to the fundamental beliefs that are pushing them forward. So to really get a handle on their different philosophies, we have to start with the economics. We have to follow the money. And when you look at their economic models side by side, it becomes incredibly clear that Bitcoin and Ethereum are playing two completely different games. And the numbers here, they really do tell a fascinating story. On the one hand, you've got Bitcoin, which you can think of as this immense digital fortress, right? Valued at over $1.8 trillion, completely dwarfing Ethereum. But then, on the other hand, you have Ethereum. It's more like a bustling digital metropolis. It's processing 4 times the transactions with nearly 4 times the active users. So the message couldn't be clearer. One is built as a store of wealth, and the other is built for constant activity. And where is all that activity happening? Well, a huge chunk of it is in what we call decentralized finance, or DeFi. Just think about this. Ethereum commands a massive 68% of the total value locked. And that's just a term for all the capital that's fueling these new financial applications around the world. It has effectively become the foundational layer for an entirely new financial system. That's a role that Bitcoin, by its very design, was never meant to fill. Now, these huge economic differences, they're no accident. They are the direct result of some really fundamental architectural choices that were made years and years ago. So let's peel back another layer and actually look at the technical blueprints that define each of these networks. Okay, at the very heart of each network is something called its consensus mechanism. It's how they agree on what's true. Bitcoin uses what's called proof of work. You can imagine it like a fortress secured by a gigantic energy field. It consumes an incredible 173 terawatt hours every year. I mean, to put that in perspective, that's about the same amount of energy as a small country. Ethereum, on the other hand, now uses proof of stake. It secures its network with locked-up capital instead of energy, and that slashes its energy use down to something more like a small town. And I want to be clear, these are not just minor technical tweaks. They represent radically different philosophies on how you even achieve trust in a decentralized system. So that brings up a huge question, right? Which system is truly more decentralized? Well, the answer is a lot more complicated than you might think. As it turns out, both systems are wrestling with their own centralization risks, and they're not always the ones you'd expect. Let's take Bitcoin first. In its proof-of-work world, the big threat is concentrated mining power. If you look at the data, consistently, the top 3 mining pools control over half of the entire network's processing power. Now that creates a pretty heavy reliance on a very, very small number of players to keep the whole system secure. But here's where it gets really interesting. Ethereum's proof-of-stake system, which was supposed to solve some of these issues, faces a very similar challenge. Just one entity, the liquid staking provider Lido, controls over 31% of all the ETH that's staked on the network. So what this shows us is that the ghost of centralization, you could say, haunts both architectures. It just shows up in a different disguise. And there's another layer of risk here, one that people don't talk about nearly enough: the actual infrastructure. Get this. Over 60% of Ethereum's nodes, we're talking about the actual computers that make up the network, are running on centralized cloud services like Amazon's AWS. Think about what that means. A single outage at Amazon could bring a massive portion of the so-called decentralized web to a screeching halt. Yeah, true decentralization, it turns out, is an incredibly tricky business. So you can see these architectural blueprints, they're not just about technology. At a certain point, they become more like articles of faith. They become battlegrounds for deeply held beliefs, for creeds that have, in the past, sparked historic, community-splitting civil wars. Let me take you back to 2016. Ethereum was forced to stare this question right in the face. A hacker found a flaw in a smart contract called the DAO and started draining it of what was then $50 million. All of a sudden, the entire community was trapped in this impossible ethical dilemma. And from one side of the debate, this was the rallying cry. Their argument was that the contract, no matter how flawed, was the final word. Code is law. To intervene, in their view, would be to violate the most sacred principle of the network, an immutable, unstoppable chain. In this clash of ideals, it literally ripped the network in two. From that conflict, Ethereum Classic was born, a version that championed absolute, unwavering immutability. The main Ethereum chain, however, made a different choice. The community decided to step in, arguing that protecting people's property rights was ultimately more important than honoring a piece of broken code. What's so fascinating is that this was a choice between two valid but completely conflicting libertarian principles. And then, just 1 year later, it was Bitcoin's turn to face its own identity crisis. The community had to ask, what is the ultimate purpose of this network? Is it supposed to be an unchangeable, absolutely decentralized store of value, sort of like digital gold? Or is it meant to be a global payment system that has to adapt and scale to survive? This whole conflict, which became known as the block size war, also ended in a fork, a split. The original Bitcoin, or BTC, doubled down on its commitment to decentralization. It chose to keep the data blocks small so that almost anyone could afford to run a node and personally verify the network. But then you had Bitcoin Cash, or BCH, which split off. They argued for much larger blocks, believing it was necessary to enable cheap, fast payments for a global market. It wasn't just a technical debate. It was a proxy war over the very soul of the network. Okay, so these historic conflicts, they have profoundly shaped where we are today. And what we see now is that both ecosystems are actively building towards a more autonomous future. They're developing some really clever solutions to address the exact trade-offs that their philosophies force them to make. And you can really see their evolution in action. Bitcoin is tackling its payment limitations with something called the Lightning Network, which basically moves small, fast transactions onto a separate layer to speed things up. Meanwhile, Ethereum is using its own layer 2s to scale, but it's also deploying a fascinating new idea called distributed validator technology, or DVT. The easiest way to think about DVT is like splitting the keys to the kingdom among multiple people, so no single person or group ever has too much power. It's a really ingenious way to fight that ghost of centralization at its very core.
So, if there's one thing to take away from all this, it's this. The debate between Bitcoin and Ethereum isn't really about picking a winner. It's not a horse race. What we're actually witnessing is a grand live experiment. It's a real-world test of two fundamentally different models for governance, for economics, and ultimately for what freedom could look like in a digital world.
And all of this leaves us with one final, crucial question to think about. As these two titans continue to evolve, which of their blueprints will ultimately prove more foundational for our shared digital future? Will it be the unwavering, predictable security of digital gold, or will it be the programmable, endlessly adaptive power of a world computer? Right now, the answer is still being written.